how bad has it really been? Forget about, the market's only down like this percent, that percent. Beneath the surface, it has been so bad. Stocks are getting crushed. And what Wall Street firms are doing now is they're making these crazy price adjustments. But in many cases, it's so funny because they keep the buy ratings, right? I'll give you an example this morning. D.A. Davidson, they lowered their target on Paycom to $385 a share from $550. But at the higher end, the stock is rated a neutral. Now they rated a buy. Joining me now to help decipher this, Michelle Snyder and David Nicholas. Are you seeing similar situations in your own work? Stocks that you thought maybe, okay, this could be a $700 stock a year from now. Maybe it could be a $500 stock, but stay with it, Michelle?
Well, you just said exactly what I was going to say, which is it's the old, if you loved it at 100, you got to love it at 50, right? And so you have to have some kind of a strategy, and that's where analysts sometimes, they're so myopic because they're crunching numbers and they're not thinking about all the signals that we've seen. So really, what I'm finding is I have a list, but I'm not going to buy on a crashing knife or a falling knife. I'm going to wait now, and I think that we're still going to be relatively range-bound at some point. But yeah, if I liked something like Mountain Pass, which we've talked about a lot, at 40, and now it's trading 36, 37, I've bailed already, but I'll wait. I'll wait now for some kind of sign of a bottom.
Right. I mean, David, it seems like obviously because of the pace that some of these stocks have come down, the fundamental argument probably didn't change. Does that make the stocks more attractive, or maybe it wasn't there in the first place?
Yeah, Charles, that's just it. It's got to have the fundamentals, right? We've got to have earnings. We've got to have some quality that we can place our trades behind. But I'll give you Lucid, for example. We bought it around $20 a share, got all the way up in the 70s, right? And even today, I said, look, I'm almost tired of holding this thing now. I wish we would have dumped it back then. So I think a company's got to have earnings. The companies that don't have earnings are getting destroyed. We can't trade on hope. That was a very 2021 thing to do. This has got to be quality earnings, quality growth, and even beating expectations is what these names are needing right now to excel.
Michelle, I want to get to your technical analysis here. On the upside, where's the point we break through on the upside that you can say maybe the coast is clear and become more aggressive?
Well, if we were looking at the S&P, I would say it has to get through 450 or 4,500 and stick there. I like to look at the small caps because they were the first ones to break down. Small caps started breaking down in November, went into a caution phase on the weekly in December. So now if they can hold that 2021 low of 190 and get back through, say, 205, which is really kind of where it was finding a floor for months and months and months, then I'd say, yeah, perhaps the worst is over.
Yeah, I think it was that big day we had was a Monday where the small caps really outperformed. So in this environment right now, David, what are you buying? What are you looking at?
So, Charles, really like energy. So we actually made some trades last week. ExxonMobil, we put a position in. Conoco, we put a position in. Hydrocarbon, so a name like Fang. We're also looking to put a position in Devon Energy. So again, I just think what we have going on internationally, geopolitical risk out of Ukraine and Russia, I think oil is going to be supported. So I think this is an area where we can still get some upside. If we see oil trade over $100, $105 a barrel, that's where I would be looking to take profits on some of these oil names. But we still have some good upside, I think, in some of the energy sector.
Absolutely. Sure. Hey, I got a minute to go. I want to get thoughts. We could just do, because it's a minute, buy, sell, or hold. Apple, do you own that going into the earnings, or do you wait till after the bell, see what they have to say, and then perhaps reassess tomorrow? Michelle, buy, sell, or hold before the earnings?
I would definitely hold before the earnings, and I have a strategic plan. If it goes to 145, I think that's a really good place to buy it. If it clears 170, I would still buy it, but I would be more active in the trade.
David?
Yep, we own it. I hold it into earnings. I'm buying tomorrow on any selling.
Oh, real quick, David. Jay Powell, did his comments and today's reaction to those comments, the FOMC comments, did that change anything from your investing approach right now?
No, it didn't. It just made me think, look, the Feds are going to be aggressive, and I don't think we're going to see any determination on rates going lower. So I think rates are going above 2. I've been saying that all year. So I just think that's where it solidified it for me yesterday. Rates are going higher in the short term. You had a great guest on earlier about the yield curve. We want to watch that. But this just told me, look, they are coming with a vengeance this year. Your portfolio needs to be adjusted accordingly.
I tell you, the yield curve does not speak well for the economy. It's amazing to think that this is going to be a very aggressive Fed into a weakening economy. It's going to be one heck of an experiment to watch. Michelle, David, thank you both very much. Always appreciate it.